Matt Justice here for Tackle Trading. Just recently, I've decided to put forth a lot of effort in terms of giving people an opportunity to learn more about the currency market, about the Forex market. I personally love trading the Forex market, but I'll tell you right now, one of my mentors one time told me that it didn't matter how much money I made in the stock and options market. If I didn't know how to protect it in the currency market, I wasn't going to have any at the end of the day anyways. And what he was talking about is the macro perspective of what's happening with the US dollar. The US dollar, potentially over the next 5-10 years, losing its reserve status and thus sparking a tremendous amount of devaluation in US dollars. And I certainly see that being the case as well. And so what I'm trying to do is give people an opportunity to learn more about the currency market so that they can start becoming more aware of what's going on in the currency market, number one. And also there's just some fantastic trading strategies out there in the currency market, like go to bed trades and news-based trades and bank open trades and carry trades and swing trades and you name it. It's an absolutely fantastic market. So I've started a series called the Forex Trading 101 Definitions and the Forex, it's just basically called Forex Trading 101. Got 2 blog posts out there, Tackle Trading already. One is just the definitions of the currency market. The other one is just the basics of the market. And so I will do this about once or twice a week, just writing a nice little blog post. Obviously, I do the Forex report where we analyze the currency market from an economics perspective, meaning economic reports, as well as a technical perspective, kind of seeing how I'm looking at the marketplace on a weekly basis. But also once a week, I want to also do a video that is based in this entire Forex series that is kind of based in trading strategies. And the first one I wanted to really kind of talk about is that of literally probably the number one trade in all markets. It literally is a $14 trillion trade out there right now, and that is of the carry trade. And so let's talk about what the carry trade is and how we can utilize the carry trade for our advantage in terms of selling the dollar. Now, the carry trade has been placing a tremendous amount of pressure on the currency market, because what we've traditionally done in terms of the carry trade is sell the US dollar, which has a historically low interest rate, buy some other currency, whether it's in the emerging markets or whether it's some other currency with a higher interest rate, and we would get paid in 2 capacities. Number one, as the dollar traditionally has declined in value, that's number one, or number two, we'd get paid in the positive interest rate, and that's what the carry trade is. It is simply carrying a positive interest rate because both currencies in the currency pair, they have an interest rate associated to that currency. That's why it's called the carry. So if you sell the US dollar and buy a currency with a higher interest rate, you get to carry the swap rate, which is the difference between the US dollar's interest rate and that of the other positive interest rate. Well, the problem is right now with the carry trade is the US dollar is really strong against almost every currency out there, which means it's putting a lot of pressure on the carry trade, which is the biggest trade in the entire world. Well, what the carry trade once again is we're going to sell a currency at a lower rate. We're going to buy a currency at the higher rate. An example traditionally would be the US dollar, Australian dollar, or something along those lines. Because this is an inherently leveraged tradable position, we carry it on the total contract value, which is not only the amount of money that you place in a trade, but the amount of money that you control based on the margin. So we can carry a fairly decent yearly, and this is not a short-term trade, this is a long-term trade. We can carry a fairly decent interest rate on a yearly basis. And when you look at some safe haven investments out there, you're looking at what the bond market. The bond market isn't paying anything right now. Another safe haven investments out there are defensive sectors that are really, really good. Other times people have safe havens where they just go to the money market like checking and savings accounts and CDs and whatnot, and that doesn't pay anything. It certainly doesn't cover the rate of inflation. And so when we're looking at the carry trade, this is a very traditional trade. It's a very conservative trade historically in terms of carrying a positive interest rate where we can have a safe haven of getting paid basically free money. And so it's either a debit trade for the individual who is buying the currency with the lower interest rate. It's a credit trade for the individual that's buying the currency with a higher interest rate. An example traditionally, let's go back to here. An example, historically speaking, is that of the Australian dollar US dollar pair. Australian dollar has traditionally had a much higher interest rate than the US dollar. I was looking at this just recently. This is a screenshot from just 2 weeks ago. And so when we're looking at this, you're looking at a big movement on the downside. These are weekly charts. You're looking at a big movement on the Australian dollar on the downside here, but you're coming right into this support level right there at about the 0.865 level. It has confirmed at that support level going up. And so what we're looking at doing is at this support level, we're going to buy the Australian dollar. We're going to sell the US dollar. We're going to look at this trade for the long term. We're looking at it as a yearly type trade, not short term, not day trade, long-term type trade. We're going to invest $10,000. That's the amount of money we're going to place in the trade. The total contract value at 50-to-1 leverage is $500,000. Well, the carry is a positive 2.5% swap rate or lend rate. That's the percentage that we get to carry on a daily basis against whoever is buying the currency with the lower interest rate. Now, if you look at this over a yearly basis, 2.5% of $10,000 isn't very much, but it's not 2.5% of $10,000 yearly. It's 2.5% of $500,000 yearly. And so when we're looking at that, we would get to carry a positive interest next year of $11,250. Now that's my type of safe haven investment where we can literally look at 110% return next year on our money invested. And that's why the carry trade is such a popular trade out there in the marketplace. It's a safe haven trade. It's a positive interest rate. Now you can always lose more on the direction of a currency than you can on the carry. So you gotta be technically sound in this. Another example, if you don't want to use the US dollar right now because it's such a ridiculously strong currency right now, is maybe buying the Australian dollar and selling a trash currency right now, such as the Japanese yen. Right here, you have a long-term trend that is going up. You're setting at a support level in that long-term trend on the Australian dollar, Japanese yen. You're looking at buying at support, once again, 365 days in the trade, $10,000 invested. You get the exact same lend rate because the Bank of Japan's interest rate is about similar to the US dollar's interest rate, and the Australian dollar is what it is. It's slightly higher than that of the yen or the dollar, and so you're looking at $10,000 investment. You're looking at a $10,000 return over the next year. That is what we call a safe haven. We get to sell a trash currency in the Japanese yen. We get to buy a much better currency in the Australian dollar, even though the Australian dollar has some relative weakness. But you also have a 600 pip target up into this level as well, which means you can make a tremendous amount of money on the pip target if it does in fact go up to that level, which I do anticipate. And then you also get to carry the positive interest as well. That is the carry trade. Next week we will do economic event trades, which are what we call news-based trades. They are the roller coaster of the currency market. Hope you enjoyed the carry trade example for the ongoing series at tackletrading.com regarding Forex trading in general, both in terms of the Forex blog called Forex Trading 101. We have the Forex report on a weekly basis coming out on Monday, and now we'll also include a video series on that detailing a strategy in the currency market on a weekly basis. If you like the videos, guys, get out there and post some comments on the videos. Share it out there on Twitter. You can catch me at MattJustice13. I use Twitter a lot to post some of the trades I make, not only in the options market, but in the currency market as well. You can check out the podcast at iTunes, Trading Justice. That is the podcast out there as well. If you like the podcast, leave us a review, a great review on iTunes, and help us get that truck rolling out there. Matt Justice for Tackle Trading. We'll see you next week.